Today's Monday, October 14th, and this is a chart review on a position I took earlier today involving Caesars Entertainment, ticker symbol CZR, and as of the time of this recording, the stock is quoted at $45.53, and in overall trading, the stock price is up a little over $1. So this is the chart layout at the daily time frame. Each candlestick equals a day's worth of trading. This candlestick is today's candlestick. The red vertical dash lines are system-generated markers for expiration Friday for monthly option contracts. And the most recent expiration was back on September 20th. The upcoming expiration is October 18th, this Friday. And the one beyond that is on November 15th. Now, the blue horizontal lines are, from my perspective, reasonable support and resistance levels. Just looking left, it appears that these levels are or had some point acted as either both support and or resistance. And we can see that as prices ranging sideways earlier this year. So real quickly, now that price is breaking above this upper support resistance level I had marked up at 44.63, I thought this was an ideal opportunity to short Caesars Entertainment, anticipating that heading into and beyond the October 18th expiration, it's possible that price could potentially come back, possibly reversing this entire move that was initiated back in middle of September. So the reason being I took a bearish position is that just looking left, so this candlestick right here from April 26, this candlestick fell below this lower support resistance level of $38. So we can see that price was trending to the downside, consolidated sideways, and then finally this candlestick fell below it and closed below it. However, this candlestick here did break below it, but it closed at 38.04, 3 pennies higher than this local support resistance level of 38.01. So the reason I'm selecting this is that because this candlestick closed below and fell below with continuation to the downside. So I'm using this as anchor point 1 for this tool. It's called a Fibonacci time ratio, which requires 2 anchor points. So anchor point 1 is April 26, for that reason I just mentioned. And the other candlestick I'm using is this candlestick right here from September 13th, as this candlestick closed above, it broke above and closed above this resistance level. And that too also had continuation, but to the upside. So once that's placed there, this purple trend line literally coincides with the upcoming expiration Friday. So this purple trend line is pegged to October 21st, which is that Monday after the first Monday after expiration Friday. So I'm speculating that as the markets, well, specifically as Caesars stock price heads beyond this expiration date and or trend line, purple trend line, that could be the catalyst for price to start fading back to the downside. And considering that price is over $1 in today's trading session, I thought I would start building a position at this point. So I did enter a bearish position. I didn't short the common shares. I shorted via option contracts. So what I'll do is I'll switch over to the trade tab. So right here under the option chain section, I have a flag position pegged to the November 22nd expiration date, which is 39 days away from today, which is a week after expiration Friday. So the expiration contracts that are gray in gray font are monthly expiration. The yellow font expiration contracts are weekly contracts, and that's clearly shown right here. So this is a week out after expiration Friday. And down here at the bottom left are the details. So the expiration date is November 22nd. And relative to the current spot price of $45.53, I selected the $40 strike price. So As a buyer of option contracts and bearish, I'm on the put side. So essentially what this is saying is that on or before the close of the November 22nd trading session, I'm anticipating that Caesar's stock price will be at or below $40. And at this point, I've only picked up 3 contracts, keeping this trade position small at this point, because again, the general trend is to the upside. I am counter trading the market. I'm betting against the market from this point on, anticipating that price is going to pull back, which would put price 3 support levels lower than where the current quote is. And that would be heading into the November expiration Friday, this last vertical line right here. So again, because I'm counter trading the market, I thought I would mitigate the risk with just 3 contracts. All 3 contracts will go worthless in 39 days. My entry price is quoted at 74 cents. Unfortunately, the trade is going against me as the premium is now valued at 71 cents, as the stock price is still trending higher. And the overall P&L, the profit and loss side of this ledger, is reflecting a losing balance of $9. Now, considering that I've covered the thesis for my bearish outlook and the current status of this trade, the last thing I want to touch on is the valuation. So here under the option chain, each of these 100 equals the number of shares each option contract is holding. So the 3 contracts is akin to holding 300 shares of the underlying stock. So the multiplier is 100. So to put that into perspective, my entry price is quoted at 74 cents. I need to multiply that by 100 for the 100 shares. So that means 1 contract is actually valued at $74, almost 1.5 times more than the current spot price. And I picked up 3 contracts. So I am risking $222 over the next 39 days. Now, the alternative was to short 300 common shares. So using the quote of 45.53 times 300 shares, the margin risk exposure over the next month or so would have been almost $16,700. So I thought I would rather risk $225 rather than almost $14,000 of exposure betting against the stock price, the trend. So also the other catalyst I'm keeping an eye on is this ticker right here. So this is my futures watch list. DXY is the dollar index. This is what's tracking the strength or weakness on the US dollar compared to a basket of foreign currencies. So about a week and a half ago, the dollar was slightly over $100. It's now at 103.26. So it's up a little over $3 and almost 30 cents in the week and a half, 2 weeks. So if the dollar continues edging higher, we can see that negative pressure is already starting to build up on the foreign currencies. So M6A, M6B, M6E, these are foreign spot pairs against the dollar. M6A is the Aussie dollar pair. M6B is the pound dollar. M6E is the euro dollar pair. So 2 of the 3 are already in the red. So that could bode well in my bearish outlook for CZR Entertainment, as well as the other commodities and securities that's tracked here. So gold has pulled back $10. I mean, it's not much considering how gold has been very bullish. MCL oil is down $1.69 at this point. So anyway, these are just examples of what I'm tracking. But I think the catalyst will be the strengthening dollar over the next few days. So yeah, I'm going to keep an eye on that. So anyway, that's the current status of this trade and my general outlook. I'll pause it here. I'll pick it up after October 21st. I'm very curious to see if this assessment has any value. So more to follow. So this is a quick status check on the Caesars Entertainment short. Today's Monday, November 18th, and it's been about a little over a month since I entered this short, and the spot price is quoted at $36.64 as of the time of this recording. And price is clearly below this local support resistance level I had marked up at 38.01. And as I was anticipating, as Caesar's price was heading towards this purple trend line, I was anticipating a pullback, and we see that happening right here on October 21st. So now that there's not that much time remaining, switching over to the trade tab. So right here under the P&L, it's currently showing a profitable balance of $773. The option premium is quoted at $3.32, where I entered at 74 cents. And 4 days remaining before these contracts expires worthless, which is at the close of this Friday's trading session, November 22nd. Importantly, these contracts are now designated ITM, or in the money. So because there's not that much time remaining, I'm going to place an order to go ahead and close this out. I'm going to see if I can close this out at $3.50 per option contract. And I'm going to place this here as a GTC order, a good till cancel. So it will stay active until these contracts expire as worthless. So if I click confirm. So right here is a credit. This is a gross amount of a little over $1,000. So minus the cost of getting into the trade. But this is the ballpark where I would be closing out this position for a profit. I'll provide a detailed breakdown on this option trade at the end, but this is the order, and there it is. My order is sitting right here. So if I go back, view orders, there's my limit order to sell at $3.50, and we're at $3.32 right now. So I'll go ahead and pause it again, and I'll pick it up hopefully by the end of today. This trade is over with. I don't want to drag it out the rest of the week. I just want to close this out at this point. So more to follow. So a quick status check. It's been a few minutes since the limit order was placed, but I was just recently filled. Showing down here at the bottom, I don't have a position anymore. Quantity is 0, and P&L is 0. So I am out of this trade. Caesar continues to drop. It's now $36.63. Well, I just rallied up a little bit. But switching over to the chart. So this is a chart breakdown. The chart on the left is the daily chart, which was shown before. The chart on the right is specific to the option trade. You can see here that the ticker symbol in the premium has a quote of $3.50. This is my limit order that was just filled. And the ticker, which has a string of letters and numbers, is specific to Caesar Entertainment for the $40 strike price. So CZR is the stock symbol, 24 is the year, 11/22 is the expiration date, November 22nd. It's on the put side and the $40 strike. And right here, it has a high of $3.50. And here's my confirmation bubble showing that I was closed out. And if I click on the timestamp, this order was filled a little over 10 minutes ago. So I am officially out of the trade. So this was a gross profit of a little over $1,050 minus the $222 that I used to get into the trade. This was a net profit of about $825. I'll provide a breakdown at the end, towards the end of this screen recording, but I was fortunate enough to capitalize on this drop as I was anticipating it would, with the probability that the market was heading into expiration Friday. So I believe that was the catalyst. So until the next trade setup, I'll see you.